panel discussion for our keynote. So this panel discussion is entitled Trust in Tokens, Regulating Blockchain Securities. So the topic here is how can investors navigate new financial products like security tokens? And where does the government stand on regulating cryptocurrencies and other digital assets? While regulators around the world struggle to understand and address this complex topic, it's increasingly important for individual and institutional investors to stay current on the new developments. Our panel of the top Canadian blockchain lawyers will discuss current and future issues impacting trade in the quickly changing field of blockchain-based securities. So I'd like to welcome to the stage a few people, our moderator, Matthew Burgoyne, and our speakers, Amber Scott, Pamela Draper, and up on the stage here, Melissa Smith. So let's give them all a big round of applause.
Everyone hear me? Cool. Mics aren't on, I don't think.
Tech support.
I see
Tech
furiously
support.
hitting buttons.
Well, my name is Matthew Burgoyne. I'm a partner at McLeod Law in Calgary. Can everyone hear me? No.
Are the other mics on?
No, none. Oh, mine is.
Oh, low. Oh,
Yeah.
thanks. Thank you. Can people hear me now?
Yes.
Okay, my name is Matthew Burgoyne. I'm a partner at McLeod Law in Calgary. I'm a corporate commercial lawyer, and I act for small, medium-sized businesses, particularly businesses involved with cryptocurrency and blockchain-related products and businesses. So yeah, McLeod Law, I got into cryptocurrency in about 2013. In 2014, our firm was one of the first firms in Canada to accept Bitcoin as payment for certain legal services. We were able to carve out a little niche in the industry. Yeah, so that's this is a really interesting panel today. Here we've got some really great speakers, and I think I'll just let everyone introduce themselves. So.
Hi, I'm Amber Scott. I'm the founder and CEO of Outlier. I'm actually not a lawyer, although I assure you I have plenty of other character flaws. I like it when lawyers laugh at that joke. Usually I don't get laughs from actual lawyers, so thank you.
Funny.
We're compliance geeks, so we essentially try to keep people out of trouble.
Pamela Draper, President and CEO of Bitvo, also not a lawyer, former investment banker. That might be just as bad or worse, and depending on your perspective. Bitvo is a cryptocurrency exchange. It's located right here in Calgary, Alberta. The founders perceived the idea about 2 years ago, and the platform's now been live for about 13 months.
I'm Melissa Smith. I am a lawyer. I feel like that's a confession now. I'm with Borderlander Gervais. I'm in the Securities Capital Markets group. So I've worked with people issuing crypto assets and helping them determine if they are securities, if they're just utility tokens, and if they are securities, what that means. I'm part of our crypto and blockchain focus group at the firm. So we do a lot of work in the area I just said, and also with crypto exchanges, trying to help them navigate that world.
And what a world it is. What a complex world it is. Yeah, no, it's an interesting time right now in Canada for regulation and the crypto industry and blockchain securities. So we've got some federal anti-money laundering regulations that have been announced and that are coming into effect next year. And we've, it's funny, when I got started in this in 2013, we really only were concerned as lawyers about AML. This was before the ICO craze, but now, so in addition to AML, we've got the securities regulators carefully monitoring this space, and we've got proposed regulations targeting crypto exchange platforms that people were consulted on a little while ago. And I guess my first question, I want to know, in your opinion, what is the most significant issue that's affecting the industry right now for regulation? Let's start with Amber.
I honestly think, generally speaking, if you can write code, if you can figure out systems that make things work, figuring out regulation should just be something that comes relatively naturally, right? It's a system that you act within in specific ways. You have certain things that you do to make it work. And for folks that are good at what they do, I don't see that as a significant barrier to entry. I actually think the biggest barrier to entry, which isn't exactly regulatory in the Canadian marketplace, is banking and access to stable banking services. Because one of the things that companies in the cryptocurrency space see is that they've had bank accounts that have been closed and sometimes closed with very little notice. And that gets problematic. I think in cases like Quadriga CX, if that was a sort of normal company operating in a space where people didn't have trouble banking, we would have seen that coming from miles away. In the sense that if they had a bank that was dealing with all of their accounts that had that type of transparency to be able to monitor and see it, then things like, oh, it takes 2 weeks to get my, and I have to follow up 10 times before I get any of my withdrawals. And
That's not normal? That doesn't...
It shouldn't be normal. It's
right.
It's not normal in any other industry. Like, you think about, you use PayPal, right? And if like PayPal or Western Union like lost your transaction for 2 weeks, no one would use that service anymore. But it's like that in crypto, and it shouldn't be. I do have a lot of empathy for the banks because I think sometimes they're between a regulator and a hard place, so they deal with a lot of questions from their own regulators when they deal with what's considered to be high-risk businesses. But I love hearing guys like Jeff up here talking about how it's worth the risk.
I'm going to take a slightly different take on Matt's question and what's the biggest challenge. I think Amber's was from participants in the industry, but what I would say the biggest challenge from when you think about regulation and would probably be consumer protection, and that Quadriga is a big example of that as well. So to Matt's point, if you, or Amber's as well, if you're a coder and you have a laptop, historically you're able to put up a platform and service customers, in some cases thousands and thousands of customers. And while Quadriga had issues with banking, for sure, part of it was 4 guys with 4 laptops were able to set up a company that took millions and millions of dollars of funds and move them wherever they wanted to with no oversight. So some of the bad actors have been weeded out of the industry.
Jurisdiction on these platforms, because I think traditionally the way I've thought about platforms that, for example, only trade in Bitcoin, Ether, Litecoin, maybe they don't have jurisdiction, and they shouldn't even be bothering to propose to regulate the industry as a marketplace or a dealer. But I've heard through the grapevine that the CSA are leaning towards taking the position that they do have jurisdiction on all platforms, and even those just trading Bitcoin. What are your thoughts on that? Maybe Pam, do you want to?
I do think that regulators need to take the approach of sort of a fresh set of eyes on it, and that there are nuances to digital assets that if you try to say, okay, if this is a security, I'll regulate it, and if it's not a security, then I won't, that does leave some areas untouched, and the biggest who have access to it and what they could do with it. So in a way, I think it's good. We'll see where they come out on the other side and how they address it, but if you just specifically say it's a security or it's not a security and we'll regulate it if it is and we won't if it's not, digital assets are a completely new category and they need to be addressed as digital assets themselves as a new frontier.
Thank you.
Yeah, I just echo that. I mean, I think the technical argument the securities regulators are trying to make is that unless it's a situation where the exchange does not have custody in any way of your cryptocurrency, that it's a derivative, and that the exchange then has the custody of it. You have a right to obtain it, but you don't actually have possession of it. So that's their argument on why all platforms might be regulated. Whether you agree or not, I'm not sure, but I think that's how they'll probably get to it in the end, and I think you're right that they will end up regulating.
And to Amber's point, fraud is fraud and fraud is illegal, but if you had regulation to adhere to that addressed how you should store things and the people that have access and enforcing multiple people to have access in order to gain it, then that helps at least prevent against it.
I totally agree. I think if there were custody requirements, audit requirements, insurance requirements in place that were mandated perhaps Quadriga never would have happened. So Amber, maybe a question for you. When enacted, do you think the AML regulations might force some Canadian businesses to consider locating outside of Canada because they don't want to register as a money service business for whatever reason?
I think that's a really dumb strategy if your business is in Canada.
Mm.
But I'll tell you why. There's a reasonable explanation for this. As of June 1st, 2020, anti-money laundering laws apply to dealers in virtual currency, where they become money services businesses. A year after that, there's another change in the law that will come into force, and that will apply to foreign money service businesses, which are going to include dealers in virtual currency. And what that says is that if you're targeting Canadian customers, then you get to play by our rules. And so if your plan is that you're going to go and do a whole reincorporation in some other country, but still keep targeting Canadian customers because all of your business is in Canada, you bought yourself a year, and it was probably less expensive to enact the compliance program in the first place anyway. And it would have involved you in the system during the phase where the regulator is much more, I don't want to say lenient, but it's what I mean. So the examinations are easier, everyone's going through a learning period. So I think if your strategy is to just go locate yourself outside the country for a 1-year grace period, you're missing some of the really good stuff that will happen, and you're not really buying yourself a lot of time.
Do you, Amber, think that the cost to comply, to create a compliance manual and actually follow the manual year over year, do you think those are going to be prohibitive for some businesses, or no? Is it?
So I think potentially for some businesses, depending on what their background is, and in terms of what technology are they using, what are they set up to do already. A lot of businesses have been doing voluntary compliance, and I know that I look at a really biased sample, but we started doing compliance programs for Bitcoin exchanges in 2013 and haven't stopped since then. And I don't think that it's a major expense. I think generally from a technology perspective, companies are nimble enough to figure out what they need to do, how to get connected, and how to accomplish those things. The companies that sort of worry me are always people that are like, oh, we can do transaction monitoring in a spreadsheet and things that don't scale, but I don't really see that in the crypto space. Like everybody wants to build systems that are going to automate as much of it as possible.
Pam, do you have any thoughts on that?
My thought as I was hearing Amber speak was, if you can't afford, or if you don't have the team in place to be able to do what is required, arguably you maybe shouldn't be in the business and handling millions of other people's dollars.
Fair enough, absolutely.
And I agree. I mean, I think, there's also huge reputational risks if you're not doing AML. There's huge business risks. I mean, nobody wants to inadvertently be involved in money laundering or funding of terrorism or anything like that. So to me, it seems like a cost of business probably going forward.
I guess there's a feeling maybe for some Canadian exchange platforms that the offshore platforms are maybe not regulated properly, or they're involved in sketchy things like arbitrage. And I just, how are those exchanges affecting the industry as a whole?
I struggle with that too as I was thinking about it, because if you think about regulating Canada, if Canada's regulations are more stringent than other geographies, you do potentially encourage some form of jurisdiction shopping, and maybe that's fine for the company, but when you think about the Canadian consumer, does the Canadian consumer then get excluded from enjoying some of the benefits or opportunities potentially that other jurisdictions would have? But at the same time, they're protected, so I think it has to really be kind of a balance between the two on that front.
I don't worry about that very much from an AML perspective, and I mean, part of that comes from the guidance that the Financial Action Task Force just released for virtual asset service providers. But it's non-binding guidance, but nobody doesn't want to be a member of the Financial Action Task Force because that creates all sorts of trade barriers for your country. But all of the G20 countries in a recent meeting actually committed to implementing that guidance within the next year. And so our law, our law or regulation that we've created around virtual currencies is really well aligned to the Financial Action Task Force guidance, which is going to be status quo. So I don't see it as being problematic in the long run.
It's kind of like, why would you opt out of that, of FAFT? Yeah.
I agree with the comments. I think when it comes to AML, I don't see that as driving business necessarily out. The platforms, more so. I do think there is an argument that people will go offshore. I think personally, the sooner we get regulations in place, though, they will limit that, because once people know what they have to do, they can make a decision and move forward with what they have to do. The hard part is not being compliant, not knowing how to be compliant, not sure where the regulations are going to end up in the end. I think that will drive business out more than having clear set of regulations well.
Yeah. No, I would agree with that. I think that's right. So how do we minimize compliance risks for the industry? And what I mean is, how do we lessen exposure to legal penalties, financial forfeiture, because of a failure to act in accordance with the guidelines?
Our experiences so far has been that the regulators are true to their word, really consulting with industry. So companies that are engaging with the regulators, I think, sometimes don't like the answers they get, but we haven't seen a ton of enforcement action so far. So in regards to minimizing risk, I think, being part of the conversation with the regulators, which can be very frustrating because it doesn't move very quickly. But I do think that's probably the way forward. The enforcement actions we've seen to date have been fairly minimal. Don't know if that will change. I don't think that will change in the exchange platform area until they come out with the regime. I'd be surprised if they took a view that we will start enforcing these rules, even though we don't have a regime on how you could be compliant. So I would say staying engaged with the regulators. I think if you're doing the best you can, that's all you can do, really.
Yeah, and sorry, but Melissa, do you have much experience with this Sandbox, the CSAC Sandbox program, or would you recommend people who are trying to comply, Amber shaking her head, go to kind of voluntarily go? Because I get calls from a lot of prospective clients who are already on their way to the CSAC Sandbox, the local office of the Securities Commission, and it's like, is that really a good idea to voluntarily go and?
It might be the best idea. I mean, it's every person I've dealt with who's gone to the Sandbox and said, I have a utility token, the answer's been no, you do not. You have a security. So it's not always the answer you want necessarily. I mean, it probably is true though, or at least indicative of their position on it. They have been, they have done some, I'm totally blanking on the name, I think it's First Block, it was one of the first that came out with an exemption from registration. So there might be some exemptions you can get. I know they're willing to discuss that. They're willing to discuss maybe, one of the big things with the platform is they want you to be registered as a dealer, maybe some sort of restricted registration. They're discussing it. I don't know. I'm not going to say they're going to grant them necessarily, though.
I mean, I would say that if you know what you want to do as securities, like hire a real securities lawyer and understand that there's a process around that, rather than trying to skirt around it. And I mean, similarly, I would say the same thing with AML. I would say the same thing with consumer protection. Hire the person that knows what they're doing for the jurisdiction that you're in to teach you how to do it. Stay on top of it. Don't look for the way to avoid it. I was told recently there was a platform that was advertising itself as, if you have this platform, you don't need to have a compliance officer for and all purposes. Ooh. And I'm like, cool, that's right in the FATF's guidance and all the legislation, that's literally one of the 5 pillars of a compliance program, and it can't be, no, we have this software. It has to be a human. That's the way the legislation is written. Don't buy that. Like, don't buy something that's a shortcut. It's gonna bite you in the butt.
I was going to say something similar. As an industry player, it's incumbent on you to be abreast of everything that's going on, but also don't just bury your head in the sand. You see that with a lot of industry players in this space, especially in the crypto space as it's kind of grown up. People said, well, it's different, it's not regulated, and there's nothing that we have to comply to, so therefore we just won't. But I think we're all aware that it's coming, and long before it is, you have to have policies and procedures in place that get you ready, but then also keep up to date with it. Speak to the regulatory bodies, have those conversations, keep molding your business so that you are ready well in advance. There's been very few actions, as you referenced, and the ones that have been, I would say it basically would come down to common sense. Like there's a couple I can think of where they ought to have known better than to do what they did, and it's not surprising to anyone that they're getting in trouble.
Just going back to that consultation paper on the exchange platforms, like potentially if a platform is subject to the marketplace regulations and has to become registered as a dealer, I would think that there would be a pretty high barrier then to entry for those entities if you're an exchange.
There's an investment for sure to be made, but again, I think I would go back to my point that if you're not prepared to make that investment, do you have the right to be addressing the everyday consumer that could just sign up for your platform? It takes 5 minutes and load money onto it. So absolutely there's an investment, and it's an ongoing one as well, but I think it's one that's not insurmountable by any stretch of the imagination, and Amber could probably speak better to the specific costs, but I think it's probably an investment that as a hurdle to operate in the space, it's probably a better thing than not.
Yeah, and I just jump in, something that I found really interesting with the consultation paper, and I know there was a lot of responses, so it'll be interesting to see where they land, is unfortunately right now the problem is you can't just go and say, I'm a marketplace, I will register as a marketplace. And part of that is, it looks like they're thinking to delegate everything to IROC. I don't think IROC is set up at this point to deal with platforms. I've heard that they are in the process of striking a committee to look at it. It's not struck yet. So will we have regulations in a year, maybe 2 years? It's hard to know. So we're pretty far away, and just the companies around that. I don't know, of anyone who would be willing to fully insure a company the same way our IROC stock exchanges are insured at this point. I think there's companies that are looking at acting as custodian. I don't know if any of them are recognized at this point by the securities regulators, where they would just say, yes, that's an acceptable custodian, great, let's move forward. Currently, you'd need a clearing agency. I don't think any clearing agencies, I don't even know if a clearing agency makes sense. I don't think there's any that are doing that right now. So there's a lot of steps that need to happen right now to get registered, which is, the consultation paper was great. They're asking the questions. It's nice to see they're actually thinking through. We can't just use our current infrastructure. There's differences here. We need to recognize those differences. But it will be a little while, I think, until we have those answers.
And then Amber, jumping back to on the AML side, you mentioned FAFT, so that's the Financial Action Task Force. Can you explain a little bit about what that's about for the audience?
Sure, yeah. So they're an intergovernmental body. They started, I believe, in the either late 80s, early 90s in response to money laundering. So they come out with guidance, and all of their member countries follow that guidance that they set out that talks about the things that we have to be doing at a country level in terms of preventing, detecting, and deterring money laundering and terrorist financing. The countries do mutual evaluations, so it's a big deal if a country gets a bad score on its mutual evaluation, or it gets onto the FATF's high-risk list or non-cooperative list. It becomes much more difficult for other countries to deal with that country in certain capacities. So as much as it's described as non-binding, we all want to be on the good list.
Yeah, you have to play by the rules and be on the good list, absolutely. Yeah. Okay, so we kind of touched on this before, but the potential chilling effect that new legislation might have. So aside from cryptocurrency and blockchain, I have a lot of clients in the private lending space, a lot of mortgage investment corporation clients. And a number of years ago in Alberta, the Canadian Securities Administrators put out a notice and essentially legislated mortgage investment corporations in Alberta as being investment funds under this notice. And that hasn't been changed. And like prior to the introduction of this legislation, I was getting quite a few calls about people wanting to start up these mortgage investment corporations. Becoming an investment fund isn't, it's not a small task. After that notice came out, I got less and less calls, and in fact, right now, I still act for a number of these entities. There's like a handful of big players in the province And I really think it's driven out a lot of good, compliant businesses out of the market just because they couldn't afford to comply. So do you think that the impending AML regulations coming into effect next year and this potential legislation of the exchange platforms, do you think that will have a chilling effect?
I think it depends, because we haven't seen it yet, right? So is it smartly regulated in a way that on a global scale is competitive versus other countries that we'd want to be competitive with? And it seems like they're doing the right things. They're doing the consultation. They gave industry participants much time to respond, and they really tried to engage with the community, and we haven't seen any follow-up from that. So I think it'll be interesting to see where it comes out. But there's different jurisdictions. Bermuda is one, for example, where they've come out with a really robust cryptocurrency-specific regime that they've spent some time to fully flesh out and address the issues within the industry, and there's other jurisdictions that have done the same. So I think everyone in the Canadian industry is hopeful that the Canadian regulators will take the feedback away and come back with something that really makes sense, that strikes a balance of protecting but not stifling innovation. And will it weed out some players? Absolutely. Do you want them weeded out? Maybe. The certainty of regulation when it does come in and the guidelines put in place, does that encourage a whole different subset of people to come in that didn't come in before because there wasn't that structure in place? Maybe it does. So maybe you don't impact competition at all. Maybe you get rid of the bad competition and gain a different type of competition that's better for everyone.
Yeah, I don't see the AML as creating a big chill. I do think, maybe in the very small players, but I think that one is maybe easier to comply with, not easier to comply with, but a lot of people I think can comply with that. The one thing that does concern me sometimes when I read the publications coming out of the CSA, the Canadian Securities authorities, they always talk about taking a purposive interpretation with a view to investor protection. They never say with a balance between innovation and protection, or a view of stimulating the economy and investor protection. So I do think Canada's being really conservative on this. I do think their view is on investor protection, which generally can mean more regulations on the industry. So again, it's just speculation at this point until we see something come out. But given how often they find tokens are securities and sort of their stated, and numerous times, every publication, both CSA staff notices they put out about it, the consultation paper reiterated it, it's always interpretation with a focus on investor protection. So I do feel they might lean heavily on that way. And I mean, a little bit of that is because it was unregulated and there were some abuses, I think.
Yeah, but I mean, I think if we really wanted to do anything for investor protection, we would fund police forces that would investigate fraud. If you've ever tried to report a fraud, I had to report a $10,000 fraud against a family member recently, and it took me 2 weeks and a phone call to a friend who was a sergeant to get someone to give me an incident number.
Yeah.
And it sucks, right? But a lot of times, like your banks, your credit unions, your bigger financial institutions aren't even reporting fraud under what's going to seem like a ridiculously high threshold, of being at least $30,000 before they're even considering reporting it to the police. They're just dealing with it otherwise. And that's a problem in the Canadian context. When we have clients that come in that have been operating for years in the US in different ways, one of the things that we explain to them is that fraud rates in Canada can be very high, and you need to make sure that you have very robust fraud defenses. When we moved to the chip and pin system with cards, just about all of the fraud migrated to online. So we have incredibly high rates of online fraud and just no enforcement against it.
I would just say fraud in general, it's interesting to hear. I actually didn't realize that about fraud, but if you apply that to the cryptocurrency space, reporting any crime in the cryptocurrency space, and I had first-hand experience doing this, I was told by an officer, well, you operate in cryptocurrency, so inherently you deal with criminals. What do you want us to do?
That's too bad.
So there is, to your point, Amber, there is a real need for law enforcement to come up the learning curve and actually do something about this. It's here, it's happening, so they need to address it.
I think that's an educational piece for sure for law enforcement, and I think that'll come in time. Actually, someone mentioned Bermuda, and it's interesting. So Bermuda, as I understand it, has passed like a crypto blockchain specific law. And I thought about that, and I thought, is that really a good thing? And should Canada, or the US for that matter, do something similar? And I don't know. And the reason why I'm a little hesitant is because clearly some tokens are securities, right? The way that Bitcoin is traded or handled on exchanges can be a derivative. And so we already have securities laws addressing that. We have AML laws addressing dealing in virtual currency. Will we just have another law that folks are going to have to comply with, and are we going to get over legislated? So I don't know what your thoughts are on that. Do we need a crypto specific? I mean, in some ways, the amendments to the proceeds of crime regulations, they specifically mention virtual currency, but it's not a crypto law specific law per se.
I think what Bermuda's doing is a little bit different, and their structure is a little bit different. But I would sort of compare it to what startups can do very nimbly and what large companies have difficulty doing. In this case, like we're the large company. We're the country with lots and lots of regulation. We're not going to be particularly nimble in developing that. We're really looking, for the most part, at how things fit into existing regulation. If Bermuda's model turns out to work really well for Bermuda, and it ends up being something that encourages innovation, is great for their GDP, works really well at dealing with the risk management issues that it's intended to deal with, I think that will actually end up being imported. So like in the same way that Google buys a bunch of companies that are really good at stuff, I think that the bigger countries like Canada and the US, if that model looks really good, if it works really well, then we'll start importing the stuff that works. But we're going to wait and see how it works for them first.
Interesting.
I was going to say, maybe it's not necessarily reinventing the wheel, but maybe it's like an addendum. So it says, if you're an exchange platform or a cryptocurrency-related business, here's the cryptocurrency specific features that you need to abide by. Of course, you need to abide by all the existing securities laws, et cetera, as well. But here are some areas that potentially aren't covered, and this is what you need to think about on top of the existing laws and regulations.
Yeah, I agree. I think it would be addressed more through amendments and updates to current laws as opposed to an industry-specific law. I do think you'd run into duplication and it's a bit unwieldy then. And just to the point that Amber raised, I mean, I do think the regulators are really coordinating on an international level on this. You see a lot of conversations. I know the North American securities organizers collaborate a lot. You see I'm finding a lot of similarities between US and Canada. Canada put out their staff notice 46308, but it had a framework of sort of 14 situations to give you some guidance on whether something's a security. The US then in March put out a framework, and there's a lot of the Canadian staff notice in that framework. So I do think everyone's looking at what everyone's doing, and they really are open. So I echo that point. I think if something works really well, they'd be very open to adopting that as well.
One of the questions I had here, are KYC and AML compliant exchanges data honeypots? So in other words, how do we ensure privacy concerns are addressed and privacy is retained given KYC and AML requirements? I'm thinking of the Binance hack recently where thousands and thousands of people's ID was stolen. So is that an issue specific? Because I know that exchanges can be prime targets for hacks. So
You're thinking of the Binance hack, I'm thinking of the Capital One hack.
Capital One hack.
and the only point is, are they honeypots? Sure. Is any company that gathers personal information a honeypot? Absolutely. Is Facebook a honeypot? 100%. I think the concern in the crypto space specifically is the platforms aren't Capital One, so you don't have all of the infrastructure that a Capital One should have in place to prevent against it potentially, certainly for some of the smaller businesses. So I think in terms of protecting your own identity, it's a little bit incumbent on the person to pick an exchange that they trust, that they feel has the appropriate infrastructure in place, that they feel would be compliant with incoming regulation and has taken action to protect against something like that. But I mean, if Equifax can get hacked, how do you really ever take action to protect against that?
Yeah, I think one of the interesting things, just from a regulatory compliance conflict perspective, And privacy law says that if you have to do something from another perspective, so if you are required to collect this, then collecting it is not a privacy violation. So it sort of gets rid of the tension that way. But what still exists is that, yeah, you're creating a data honeypot. And in a lot of instances, you're not permitted to store things in a way that's going to be in a novel data structure that would allow it to become less of a honeypot. Does anyone know how many times CRA gets hacked on average every week? The answer is 3. I'm not talking 3 people's data. I am talking who knows how much data, because nobody has time to investigate it, in 3 separate instances every week. So if, yeah, dude, this is, if the data is valuable enough, if
like
the
they
data
get
is
hacked, or
valuable,
there's a attempt.
they get hacked. They lose data. Like
crazy.
There's 3 like leakages, if you will, every week of I don't know how much data. Yeah, make an access to information request. It's fascinating. So if the data is valuable enough that someone, that it's worth it for someone to go get it, they're going to try to go get it. The most terrifying conversation that I've ever had is with this lovely hacker named Jeff, where we were talking about different defenses to things, and he was like, oh, but you could just do this. Oh, but you could just do that. And finally I was like, dude, I just want to eat my dim sum. Like, stop talking, you're terrifying. And he was like, Amber, the hack I just described would cost me $100,000 at minimum to execute, which means that unless I thought that I was going to get at least $100,000 from the hack that I did on you, I'm never going to execute it on you. So you're safe. And like, it was cute and reassuring, but also, when you think about if you're CRA, if you're Capital One, if you're a growing exchange, that's going to be seen as a sexy target. And the more that you're seen as a target, the more you're going to be targeted. I think that what we have to start to look at is how can we silo our data differently? How can we start to place things in novel data structure? And how do we work with our AML regulators to say, hey, when you have us keep things in this format, where it has to be printable and text readable and things like that, it makes it much more difficult for us to ensure the security of the data. And so, and if there's anyone working on things like novel data structures that would make things more resilient, that would reduce honeypots, that would reduce single points of failure, I love you. Please keep working on it. I'm super grateful for the work that you're doing. It's really important.
Okay, thank you. Yeah, so what was my other question here? So we've all heard of or familiar with the ICO craze. What are your thoughts on initial exchange offerings? And do you know much about those? And does anyone want to?
A security by any other name.
Initial exchange offering, like the exchange going public? Initial token?
No, it's like the token offering that's vetted by an exchange and that's conducted solely on one exchange. And I think some issuers are trying to distribute their tokens by way of an initial exchange offering, because it's the exchange that's solely listing the token is seen, it gives it some credibility, and somehow it's not a security when I think it obviously is. I would agree, and I think that the Alberta Securities Commission believes that that's a security. But as a lawyer, I got a lot of calls 2017, 2018 about ICOs, and I've gotten a few about IEOs. I just didn't know if that was a thing in Calgary or not.
Yeah, no, I don't know about the thing in Calgary, but I think to Amber's point, it's hard to argue that it wouldn't be considered a security, and tied to specific exchange, you have to wonder about the conflict of interest there as well. The payment to the exchange to get listed and what that all means for everyone involved.
What about my trading bots?
I agree with that. I haven't seen one go through where they've involved a securities lawyer who has given them the advice it's not a security. I think when you look at the 14 sort of indicia of what a security is that they put out, nowhere on there does it say if you do it through an exchange, it's not a security, so I don't think it would change anything. Sort of an interesting point, the one enforcement action I've seen lately was actually CoinLaunch, I believe is the name, and that was actually an advisor who got nailed. So that was someone who was helping companies do ICOs. They didn't go after the companies that did the ICOs, even though they clearly felt they were securities. They went after the advisor that was advising they could do this in a compliant manner. And I think the company entered into a settlement, and I think the company decided to fold up shop as opposed to try to be compliant.
That's
so,
right.
Yeah.
Can I ask a related, possibly slightly salty sounding question, but there's a reason. So in the FATF's guidance, they talked about utility tokens, and you mentioned utility tokens earlier. But one of the things the FATF said was essentially you can't hide behind terms that nobody, including the industry, understands. It was kind of a beautiful troll hidden in legislation or in guidance rather. Have you met a utility token, and what did it look like?
I've met a few.
Yeah, I mean, I think there are a few that you can say are not a security that are truly a utility token, but you have to go through that painful analysis of the 14 things and say, it doesn't do this, and it doesn't do this, and it doesn't do this. Expectation of profit really is a huge one. So if you've got a token where there is a lot of tokens, you're not buying it because it's going to go up in value, maybe you have an unlimited number of tokens you can use that form some function, I think that's an argument for that's a utility token. No one's investing in that thinking it's going to go up because there's this pot of them that, makes them not scarce. So I do think
people invest in XRP though. and I don't mean that necessarily as an XRP does, but it's not scarce.
Have used that as an example of, for sure, a utility token. Yeah. I mean, that one's an interesting one because I think there's a class action lawsuit in the States on that one right now, about whether or not it's a security. I don't think all these actions are in their infancy, so we haven't seen one go through, but that will be a great chance for a court to now comment on what they think a security is in addition to the regulators. So I would certainly not definitively say that's not a security.
One of the only utility tokens that crossed my desk, these guys had a plan where the token was going to be tied to a political party, and it was going to, in effect, be a membership in a political party. So that got them out of the realm of security. But I just, so much is made in our industry, or so much focus is on the investment contract definition of a security. And like you mentioned, Melissa, there's at least a dozen other definitions. So we should think about, when we're thinking about stable coins and their new technology, evidence of indebtedness is a prong that can make something a security, promissory notes, those kind of things. So those are kind of sometimes left out of the discussion when I think they should be addressed. But I want to be respectful of time here, and Andreas is coming up next, our big closer. So I think we're going to open up the floor for audience questions. Anyone has any?
So, my question, I guess, is, do you guys think Ethereum is a security? And I guess, let me get more specific. We know it's an investment of money with an expectation of profit. We know that the...
Objection, leading the witness.
Just run us through your analysis, Dave.
Yeah, so we know that we know that the Ethereum Foundation controls the code, and we know that the miners have to implement that because of the difficulty bomb, which basically destroys their income if they don't follow along. So is there any reason, given all those things, that Ethereum does not check all 4 boxes? And if Ethereum does, why doesn't everything else?
I think the SEC has had some officials come out on record and say quite clearly they do not believe at this point in time Ethereum is a security. Perhaps, I think I've heard comments like perhaps at one time it was, it is now decentralized enough that it is not anymore. Could I argue against that? Yes, I could argue against that. I don't know though that the SEC, after having gone on record, would back off that position. The only 2 they've ever gone on record for is Ethereum and Bitcoin. I don't know that Canada would take a different position if the SEC's on record that way, which maybe is we could have a different conversation about whether they check all 4 boxes, but I think, nothing's 100%. I think it's fairly safe based on SEC comments to take the view that they will not enforce on that.
Well, yeah, and I guess I could probably argue each side, but is there an expectation of profit derived significantly from the efforts of a centralized third party? And if the answer is clearly yes, then it probably is a security. Has it been challenged? Is there, to my knowledge, there's no civil litigation involving the Ethereum Foundation. I think that the initial fundraising efforts, I think the body that conducted the initial fundraising efforts has been long since dissolved. So there would be some interesting issues there for sure, though, and I think it is an interesting argument. And maybe my other point is that like if it is, then what are the ramifications and what would people need to do about that? Would it have an effect at all now? I don't know.
I found it fascinating that SEC seemed to take the position that perhaps it was a security and now is not. To me, that's crazy. Something's a security or it's not a security. It doesn't morph over time. But that's what they said, so it must be true.
Yeah, and some lawyers believe that it morphs over time because we have the SAFT, Simple Agreement for Future Tokens, and that was a gong show, I think, for a lot of projects.
That was another one of those, like, you don't need a compliance officer. That was like, this is not mapped to any law, no regulator has agreed to it, but just do it, it'll be fine, don't worry.
Well, people were pulling precedents off the internet and using it, it's just horrible.
Hi there. Thank you for the insight and the conversations. You guys are doing a terrific job. My question is around with the developing guidance around exchanges and distributed exchanges, specifically those without an on-off ramp for fiat. How does the new guidance play into that?
So from an AML perspective, they've actually evolved it. So initially we talked a lot about on-off ramps. That changed, and the initial guidance that talked about on-off ramps was in 2015. So you hadn't had ICOs yet. You hadn't had sales that raised millions of dollars just through Ether or Bitcoin and no fiat on-off ramps alone. So the situation has changed, and both the FATF's guidance and Canadian regulation from an anti-money laundering perspective does refer specifically to swaps between virtual currencies as being covered. So if you're an exchange targeting Canadian customers and you're just using Tether, or you're using something else, and you're not touching fiat at all, you would still be covered if there are exchanges between different virtual currencies.
Yeah, and I'd say based on the consultation paper, that's probably where the securities regulators are as well. They view crypto to crypto would trigger the same.
You had a second part of your question, which I assume is about like if it's a DEX, right? If it's a decentralized exchange. I'm going to say, just in my experience, the majority of companies that I've heard talk about DEXs aren't DEXs because they're companies, right? So if you have a company behind you, this isn't just code running on the internet. There is some sort of central authority. And it's probably going to be covered under those regulations. The FATF in their guidance did say that there was room for different jurisdictions to decide how they would respond to DEXs, but most of the things that I've seen that refer to themselves as a DEX, when it comes down to how they're actually structured, aren't.
I just wanted to mention, you're talking about crypto to crypto exchanges, and I don't know if this is the panel to comment on it, but in terms of things like, is it a taxable event? So we just saw today, France essentially said they're going to be not considering crypto to crypto exchanges as taxable events, but they will be considering anything going off back into a traditional fiat currency as a taxable capital gains event. Do you see France doing that as potentially down the line having an impact as to how we do things, or do you think we're just going to kind of continue down the path that we are on right now?
I'd say hopefully, if that was the case, I think anyone would love to do crypto to crypto trades and not be taxed on them. That would be great. Will the government allow that to happen? I'm highly skeptical. We live in a pretty tax-heavy country.
Yeah, I would say probably not. not in Canada, but.
Yeah, if there's one thing as an industry that I think we could probably lobby for better things, part of it is just better tax regulation. I'd love to see a de minimis exemption. So, when you're buying your $25 gift card for Starbucks with Bitcoin, should that be a taxable event? Probably not.
Probably not, yeah.
I just add, it's fine to talk about regulations and the chill. I think the tax regulations have had more chill than any other regulations on our clients, and is most of the reasons why they choose to domicile where they domicile.
Yeah, and the CRA have put out some interpretation bulletins, I understand, and they put out some guides now on mining and tax, and so, whereas a few years ago there wasn't really any guidance, now at least there's a little bit.
In light of billions and billions of dollars already being on the market, how do you anticipate regulation affecting consumer response? So are we going to see huge shifts to accredited exchanges, or are we going to see more people playing, or not playing, sorry, more people involved in these currencies?
I think with regulation coming in, you actually do get a lot more people involved, because I think there's people, the crypto demographic currently is 25 to 35-year-old male, fairly into taking risks. I think that it happens as the industry grows up anyway, but as regulation comes in, I think you encourage a whole new generation to get a little bit more comfortable with it, an older generation to get more comfortable with it as individuals, but I think you also encourage a certain level of potentially institutional investment. I think there's a whole swath of institutional money that's invested in every asset class you can consider except for crypto, and they're all waiting for some framework around it so that they can report back to their shareholders that we're dealing with compliant companies, we're dealing with compliant securities, et cetera, and now it's okay. So I think there's a huge wave of money that comes in after regulation steps forward.
I think we really view, especially once the path is sort of laid out on platforms, I think the first movers on compliance will have a big advantage for sure, just for that reason.
Oh, see us after then.
Or not. So I had one question in regards to, so right now cryptocurrency exchanges are trying to basically fit into the existing regulatory framework for the banking and legacy financial system. But do you think that down the road, how security is treated on cryptocurrency exchanges can in turn have an effect on how banks treat individual security? And what I'm getting at here is, so something like Bitcoin is the first time we've actually had a scarce digital asset, and if an account is hacked and it is stolen, that asset is gone, and you can't just undo what happened. You can't reverse the transaction. So you have digital currency exchanges enacting things like two-factor authentication, which is very important. But my bank is still just an email and a password, and I don't even have the option for two-factor. So do you think that retroactively, when banks start dealing with this stuff and potentially even taking deposits of this stuff, are they going to have to now then look to cryptocurrency exchanges and say, oh, we actually have to follow what they're doing now?
I mean, I do think there's a whole class of security best practices that are springing up around it. I'm a big fan of Cryptocurrency Certification Consortium, so C4 does a standard called CCSS. It's free, it's available on GitHub, it's really cool. But that's the types of things that I think are going to be evolving. And yes, I think financial institutions are going to look at those things. I do think they have a lot of their own standards that exist both from a regulatory perspective, as well as just what they've been practicing for a long time. A lot of the innovation that I've seen in that space is a little bit different than what I've seen in the crypto space. So some of the things that I see from my banks that I really like is when I can go in and set up text alerts. So if $1,000 is ever charged on my credit card, I immediately get a text message that's like, hey, did you go to the Apple store? And I can call them and say, no, cancel that transaction to my card. As you astutely pointed out, The difference between that credit card transaction and a Bitcoin transaction is that in the Bitcoin transaction, if it was already a transaction that was broadcast to the blockchain, right? So it's already there. There's already confirmations. It's not getting reversed. I think because in those cases you would still have a transaction that was intermediated. So it's not like I would go, into my account that held crypto with the bank and do a transaction and it would immediately be broadcast to the blockchain. I think they could still leverage some of those traditional measures that they have, but they will need to layer other things onto it as well. And we'll see new forms of fraud that pop up around that.
I think in an ideal world, they come together, right? There's things that crypto exchanges have had to deal with that banks haven't, and there's things that banks arguably maybe do a bit better, as Amber pointed out as well. So in the ideal world, you take the best of both and put them together.
You mentioned earlier that, sorry, I'm good to ask my question, right? You mentioned earlier that the rules around KYC are very written in such a way that it's hard for you to protect your data. Therefore, every exchange suddenly becomes a honeypot. Is there any way to be able to federate the user identity KYC process to a third-party entity so that, like, say, I sign up with Bitvo, and instead of giving you my passport so that it kind of, with my name and everything, federating that out to, say, GC key from the government? Anything like that, digital identity-wise?
100%, and we actually do that at Bitvo. So at Bitvo, we don't ask you to send in your driver's license or passport. We don't want that on our records. We don't want that responsibility. We don't want to be that much of a honeypot. Of course, we have to collect basic personal data in order to do our AML KYC, but we take that basic data and do it through a third party that's well established within the Canadian system that does it for us. And I think that when you're signing up for an exchange, that's a huge consideration. I wouldn't want my passport out there to any given party and be beholden to their security practices.
Yeah, so the way that the laws are written, Bitvo can absolutely do that, but who's responsible for the KYC? You are. So ultimately, if you're compelled by a regulator to produce that, you have to be compelled to produce that. So while you can rely on a third party, you have to know that you would be able to retrieve the data, that you would be able to produce it within a very short amount of time. So there are a lot of restrictions around that. So I think that Pam is very cavalier about what was probably an extremely intense vendor vetting process.
Yes.
I just wanted to make that clear. Like, there's a lot of vendors out there that will say, like, oh, we'll hold your data, but you can never actually outsource the responsibility. So if you're the reporting entity, in the eyes of your regulator, you are always going to wear it. You are always going to be responsible, no matter what your contract with your vendor says. If you get a penalty related to not having that data, it's not your vendor's penalty, it's yours.
Thank you so much for that. I think we're pretty much out of time. I've enjoyed the panel, moderating it. Thank you. First time moderating a panel. Thank you.